Hello traders, Gary Wagner here. Approximately 11:30 in Honolulu, 4:30 in New York City. It is Wednesday midweek, the 7th day of March 2012, and this is the daily report for gold and silver. Nice showing in the precious metals markets, and after the kind of sell-offs we've seen last week, it's good to see somewhat of a reversal. We're going to talk about what we think the market's going to do over the next few days in just a second. To the board, we do have both gold and silver trading higher this morning, up about $10 in gold. As you can see, current print about $16.85. It's a little bit over a half a percentage gain, 0.63%. You've got a low of 71.10 and a high of 88.50. When we look at silver, you've got current print right now right around 33.35, puts it up about 47 cents on the day, almost a 1.5% gain. 32.73 on the low, 33.63 on the high. So you can see it's had quite a trading range. And that's one of the things that I do want to talk about. And that is the fact, for the first time, what we're witnessing, ever since we've gotten these historical highs in the market, we've actually defined for the first time somewhat of a trading range. And what do I mean by that? Well, when you have these types of parabolic rises, and let me bring this chart back so we can take a look at what I'm looking at really in terms of the long term. But when you get these kind of rises where the market moves straight up like this and then just corrects to this point, here you can see we had some difficulty in terms of breaking above a certain top, but once it broke out of that trading range and developed and went to new record highs. So there's really no defined range within there. Same thing happens. You get this long correction. The market has this parabolic spike up. This is our contract and record high here. And now what you can see is quite interesting. And that is that we've actually developed somewhat of a trading range, highs and lows right in here. So you've got, 1,500, 1,520 right in here on the low side, high side around 1,800. And you can see, without a doubt, that for the first time it's really trading within a range, and we need to see it break out one way or the other. But really, this is the first time you're actually seeing a range-bound market in a couple of years. So it's an interesting scenario, and we'll talk about that in just a little bit also. What I want to look at today, most importantly, is the fact that we've gotten a little bit of higher pricing, and what we are looking for in terms of a straight Elliott wave count, let me go ahead and blow this up, is that we want to determine when, if this is going to be an ABC correction, I should say that first, when will A terminate? This is all found within wave 2. Is this the end of it? In other words, is it going to start moving up? Will we get our B wave here? Or do we have a little bit lower to go, either to test 57 or 26? My personal feeling is that these marks here, 57 and 26, if we see some buying coming into the market, we're going to reserve these for our C wave, meaning that we'll look for the market to trade higher. Once we get a range within A, we'll look for 50 to 75% and peg that as the top of B, and then look for our final C. It could turn out to play itself out in a number of ways, but we'll have to see. This, in terms of a straight candlestick pattern, is basically a incomplete piercing line, but it's getting close to it depending on where it closes. What a piercing line is simply a market that's been in a downtrend. First requirement, you get a long black candle, or a red candle, I should say, into a down day candle. And then you get a market that opens below, or in the cash market opens at, and then closes at or above the midpoint. It's the opposite of a dark cloud cover. To take that call, of course, you need confirmation. Confirmation is going to be the following day. You're going to get another green candle with a higher high and a lower low. It's going to come in something like this. And this would signal your buy trigger. Now, there's another thing that I would like to see to issue a buy trigger, and that is a break above this 38% level, which is 1688 on a closing basis. Now, to do that, you'd get a full piercing line, but that would show me that you could possibly get some support in this area. Because right now, traders, what we're looking for are levels of support, what makes sense, and where this market might go. When we take a look at our silver market in the same way, I would feel more comfortable having it close and break above this point. This is 33.36. This is the 23% retracement level. Again, it's a matter of finding support. And as I've said so many times, support and resistance are really the same floor. If I'm on the second floor looking down, we call it support. If I'm on the first floor looking up, we call it resistance. So here's resistance right in there. This is resistance. As you can see, this market came up and it actually met resistance. There's no doubt. Here you can see that it was trading above it. This is support. Same line. Once again, it's simply a matter of what area you're at, meaning are you on the first or second floor. Now, I've drawn a simple trend line here, excluding these highs. Even if I added this line here, we still got a break below that trend line. But when we take a look at the moving averages, let me go ahead and put that up. And traders, I've basically put up a 30-day moving average, fairly short term, but you can see that as this market starts to come up, it's going to obviously lag, but here's where you get that solid signal. When it broke below, you can see that here also. What I would like to see also is a break at least above this 30-day moving average also. And if we saw that, that would also indicate to me that the worst for this interim term was over. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.